Assalamu alaikum warahmatullahi wabarakatuh. Hi friends, I welcome all you in this webinar. We are here going to discuss about what is transfer pricing. You know today corporate tax is released Federal Decree Law number 47 of 2022. There is they mention about transfer pricing and I am in this video just going to give you a overview of transfer pricing. What is the transfer pricing? What is the uh, what are why what is a is necessity, why we call it, why it is mandatory, it is relevant in transfer pricing. Agenda will be in this video. I am trying to cover what is transfer pricing, need for transfer pricing, international and domestic transfer pricing, key principles, assured enterprise control transactions. Before transfer pricing, there should be a transactions. Transactions can be a sale, purchase for services, any like for royalty as well. Okay. Transaction we can do with the two kind of parties. One with the unrelated parties, we can do them sale, purchase, anything. Okay, sale price, purchase price will be there. It is a uncontrolled price will be there. It will be decided upon the market forces. And other we can do transaction with our related parties. On such kind of transaction, there will be a transfer pricing rules will be applicable. What is transfer pricing? On what scenario transfer pricing is required? Before I think we have to discuss that why transfer pricing. Okay, like any company, let's take the example of Pepsi. Let's assume Pepsi has the headquarter in USA. In USA, there is a tax rate is assume 20% on profit. And on the other hand, in UAE, corporate tax rate is 9%. Now, what Pepsi US trying will try to, they will try to book more and more profits in UAE Pepsi company, so that they should pay less tax here and they save the taxation. Okay, now let's start. What is the transfer pricing? Transfer pricing is a technique used by multinational corporation to shift profit out of the countries where they operate and into tax havens. Like they can shift the profits to such countries where there is no tax or a very nominal tax, like UAE, 9% corporate tax. The technique involves a multinational selling its goods and services at an artificially high price or low price. What is transfer pricing? Price of goods, service, intangible assets, or any other transaction between related parties. Who are the related parties? Directly or indirectly under common control. Why transfer pricing is important? When related parties transact with each other, their commercial and financial relations may not be aligned with the market forces. They will not be aligned when we are doing transaction with our with unrelated parties. Impact. What will be the impact? Shifting of income between different jurisdictions, having different tax rate, with impact the effective tax rate of which impact the effective tax rate of M&A. Their MNEs, multinational companies, are main motive to reduce the tax burden so that they can take the benefit. But you know, the US government will say they will ask for more income and they will so that they can charge more and more tax there. Every tax jurisdiction will do like this. Then company will have to pay double tax. Like they have to pay 9% tax on UAE income, and if USA tax authority doing some adjustment, they are adding some more revenue there, then they will charge tax on that part also. So transfer pricing is very important. Concept of transfer pricing, it provide conceptual framework for pricing the intercompany transaction. First of all, there should be a transaction. At what price? At arm length price. What is arm length price? That we will discuss in coming slides. With whom? With associated enterprises, with the related parties, with group companies. what should be result? There will be income or loss. Both can be happen. What intangibles are very big tool to play for shifting profit from one jurisdiction to another jurisdiction. Like I already explained you, Pepsi USA can shift their profit to UAE, Pepsi UAE, so that they can pay less tax in UAE and they can save money. HO head office charge royalty etc. from group companies to take more and more benefit from taxation point of view. Investment in intangible has increased dramatically over the past 6 decades. Greater form of wealth worldwide is intangible capital. Intangible property accounts for more than 50% of the value of the public companies. You know this McDonald, Subway, KFC, they provide, they give franchisee and they charge good amount for those franchisees. Okay, so they can book those kind of franchisee income in low tax jurisdiction, so low income tax rate jurisdiction, so that they can save the tax. But whether it is at arm length price or not, that we have to decide through our transfer pricing rules and regulations. Let's try to understand with this example. Here I have given one example about interest rate. Okay, for the time being, assume in interest income in UAE is taxable, but in actually this is not a taxable. But for this example, just assume interest income in many countries are taxable. Okay, like there is a one company, both are group companies. Okay, head office in the India and branch office in the UAE. Let's assume in India tax rate is 33%, in UAE tax rate is 9%. Okay, in India bank normal interest rate is 12%, and in UAE bank normal interest rate is 4%. Now UAE company, UAE branch giving loans, taking loans from here banks and giving those loans to the India company. Okay, at a 8%. Whether this 8% is reasonable, is at an arm length price, that companies have to justify in front of the UAE taxation authority for UAE company, and for Indian company in front of Indian income tax department. They have to justify that this 8% is at arm length price. If they can't justify them, they can't satisfy the income tax officer, then there will be the scenario when they are going to pay double taxation. Why transfer pricing is important? What is the importance of transfer pricing? Transfer pricing versus normal pricing. Typically, market conditions which applies on negotiated price with third parties may not apply in case of if there is a related party transactions. Prices are considered to be controlled by the affiliated parties involved. Price agreed between related parties may be motivated by tax reasons that I already explained you. Significance of the transfer pricing. It is a significant for both taxpayer and tax administrators as well, as pricing within a control group affects the allocation of profit recognized by the entities operating in different tax jurisdiction. This impact on income, expense and their tax liabilities. What are the potential risks due to non-compliance of transfer pricing? I already explained you, a tax authority can do adjustment, then our income will be higher or lower, depends, and there will be the chances for the double taxation. There will be a reputation damage. If you know big company like KFC, if there is such kind of non-compliance is going on, you, if market news is coming, you know how much their share value can go down. This is called reputation damage. income and tax adjustment they can do. And if they are increasing the tax liability, then they have to pay as well interest on such tax payable. Fine and penalties tax authority can impose. Potential personal liabilities, that is imprisonment. MD or manager or director, whoever is in charge of the company, can be punished up to imprisonment into the jail. Let's try to understand the transfer pricing with this one more example. Uh, Scenario 1 is manipulated price. Scenario 2 is at arm length price. Let's discuss first about situation 1. Here, parent A, parent company, country A, subsidiary company, country B. Okay. Now, parent company is selling to the subsidiary company at 500. Their cost of goods sold is 300. Their profit is 200. In country A, their tax rate is 30%. They are going to pay $60 as a tax. 30% on 200 on their profit, $60. Come to country B, their cost of goods sold is 500 because they purchased at 500 from their parent company, and they sold to 800 to an independent party, and they make a profit of $300, and tax rate in a country B is nil. So total tax burden will be $60 on both company, on the group. Now come to the second scenario, arm length price. In this case, uh, parent company has to sell these goods to 700 to their subsidiary so that they can book 400 profit in country A and pay $120 as a income tax at the rate of 30% in country A. And country B, subsidiary company will sell it to the independent party at 800. Their profit will be 100. Their ultimate tax burden will be $120. You can understand, after applying the arm length price, their tax burden is going to be increased. If you are selling goods at 500 to your subsidiary company, you have to prove that this 500 price is at arm length price. If you can't satisfy, if you can't justify, then tax authority will do adjustments and they will increase your sale, increase your income, so that you have to pay additional tax. If they are going to increase your tax burden, then there will be a chance of paying penalty, interest, etc. on this increased portion. I hope you people understand why transfer pricing is important for multinational companies. Now, come to the specific domestic transaction. As you know, in UAE, in this corporate taxation, they given zero rate for free zone companies. If free zone companies are earning profits from another free zone companies, or they are doing only free zone to free zone, and within that free zone business, their income will be charged at 0% corporate tax. And if mainland companies is doing business earning profit, then they have to pay 9% tax. Now, if suppose one company has some licenses in free zone as well and mainland as well, what they will try to do? They will try to do book more and more profits in free zone companies so that they have to pay 0% corporate tax. If they book more and more profits in mainland company, then they have to pay more and more tax in mainland company. So they will try to shift the profit. But when you are going to shift the profit, you have to justify the tax authority that these prices are at arm length price. If you can't justify them, if you can't satisfy them, then they will increase your income. They will put fine and penalties on that and ask for the interest as well. I hope you understand the domestic transactions. Now this is the why how transfer pricing is in making. This is making from the based on OECD guidelines, Organization for Economic Cooperation and Development. They provide all the guidelines. All countries are mostly following, taking guidance in establishing, incorporating transfer pricing on the basis of OECD guidelines. You all can read these books and you can get more and more knowledge. Or if you want crux, then we are providing the crux, and we are providing consultations, we are providing framework, we are providing all kind of supports in establishing transfer pricing in your company, in your organization. You can feel free to contact us at any time. Okay, now transfer pricing, arm length price. How we will justify that our pricing is at arm length price? That we have to do through the analysis of assets, functions, and risk. These are something details. Inshallah, in future I will make in details videos on these topics as well. If we are charging some amount from our group companies, then we have to justify to the taxation authority that this is reasonable, because we are owning assets, we are having assets. Okay, we are doing some functions, we are taking risk, that's why we are charging higher amount. That we don't we have to satisfy through the documentation, not only through the wording. Okay, that documentation part we will discuss in later coming videos. And who are the associated enterprises, what are the associated related parties? Okay, these all topics, this all my presentation is based on the OECD guidelines mainly. Okay, associated enterprise, there can be three kind of relationships. One is direct relationships. Company A is participating and in management, capital and control of company B. Direct control, then both companies are a related party. Associated enterprise, indirect participation, company A holding company B holding company C. In such case, company B and C is under direct control, direct participation. Company A and C is under indirect participation. Now, company A here participating management, capital and control in company B and company C. Company A and company B direct participation. Company A and C is direct participation. Company B and company C under common control as a associated enterprises. Associated enterprises AB. Let's try to understand with this example one more. ABC LLC directly hold more than 26% voting powers in DEF LLC. DEF LLC directly hold 26% voting power in XYZ LLC. Identify associated enterprises. Like in this case, ABC and DEF are direct participation, but ABC and XYZ under indirect holding. Okay, I hope you people understand associated enterprises. Now try to understand with one more example here. What is the case? Mr. A is holding 100% share of ABC LLC. Mr. XYZ in XYZ LLC, Mr. B holding 90%, Mr. C holding 10%. But Mr. B is the son of Mr. A. So Mr. B has a control over XYZ and Mr. A has a significant influence in ABC. So since Mr. B is a relative of Mr. A's son, ABC, LLC and XYZ are ABC and XYZ, both companies are AE, associated enterprises. Now, what are the controlled transaction? What are the uncontrolled transaction? What are their scenario? Uncontrolled transaction, transaction that take place between two unrelated parties, like independent parties. Types of uncontrolled transaction are external uncontrolled transaction occur between two unrelated or third party transactions. Internal uncontrolled transaction. What are the controlled transaction? Transaction that take place between related parties and are usually a focus of transfer pricing studies. Related party transactions. Files, we have to make documentation files. Head office has to make their own files, and all the branch, all the subsidiary has to make their local files to justify that their applied transfer pricing is at arm length price. And we have come to the end of the video. Thank you everyone. for being a part of this video. And we are providing consultation on transfer pricing in your company. If you need our services, you can at any time call us, let us know. I hope you people like our videos. Please like, share, and subscribe our channel as well. You people only watching our videos but not subscribing. I humbly request every one of you, please subscribe our channel as well. It gives us more and more motivation to make more and more beautiful videos for you peoples. Thank you. At last, Assalamu alaikum.